Today we're here to answer the age-old question, what is an asset? And we're going to do it by using something from my favorite game, you guessed it, Monopoly. Welcome to Accounting How To. I'm your host, Carolyn Grimm. That's my sidekick, Terrence. We are here to put the fun in accounting fundamentals. Now let's start out by talking about what an asset is in our own personal lives. So as an example, I am sitting on an asset. My chair. What did you think I was talking about? Come on, this is family friendly here. So this chair is an asset. It is a thing that I own. Now, what you don't see, but I do, is my computer, and that is another asset. You also don't see the lights that are around me. Those are also assets. And my studio is located in another asset, a building. All of those things are things that we can look at and see. But there are other assets that we cannot physically sit on or look at. And we'll get into those in a moment. So let's come back to our Monopoly example. So here is one type of asset, an asset called cash. Here's another type of asset, a building. And of course, who can forget the asset called the little zippy sports car? So if we're talking about assets in our personal lives, it's pretty easy to understand what an asset is. You've got a car, or you've got a house, or you've got cash. Those are all things that you have, things that you own. But why does a business have assets? Is it just because they like to have something pretty sitting on a shelf? No, businesses have assets because they're going to use those assets in order to run their business. They're going to use those assets to create revenue. They're going to use those assets to create profits. So an asset is something that a business owns and uses to produce whatever it is they produce. So let's use a property rental business as an example, something like Monopoly. Let's say you own Park Place and Boardwalk. Those are assets. Those are properties that you own that you can do things with. For example, you can rent them out and get cash for them. Or you could build a hotel on those properties and rent that out and get cash. So an asset for a business is there for a purpose. It's not just about owning something. It's there for a reason. It's going to help the business to create revenue, to create profits, and to continue on. Now let's talk about what an asset isn't. So what about this apple right here? It's a nice apple, but is it an asset? For me, it's not an asset. This is something I'm going to use up. So I bought this with the express purpose of using it on my oatmeal tomorrow morning with a little maple syrup. It's going to be so good. But to me, this is not an asset. This is actually an expense. I spent money at the grocery store to get this piece of food that I'm going to consume. So something that you're going to consume like that is not an asset. It's an expense. How about a bar of soap? Is that something that you're going to have long term? I hope not for the people sitting next to you. I hope you're going to use that up. So that's another example of an expense. But now let's change that scenario. This is no longer my apple. This is an apple that is owned by the grocery store. So is it an asset or an expense for that grocery store? It's actually an asset. This is part of their inventory. So they have purchased this with the intent of selling it in order to create revenue. So for the grocery store, these apples are inventory, a type of asset. If we were talking about an apple orchard, they are in the business of raising and selling apples. So for them, apples would be an asset. Now, when we're talking about assets, one of the things that we do on our financial statements, on our balance sheet, is we list out all of those assets. And then because accountants like to keep things really organized, we're going to create subcategories of our assets. We're going to group like assets together. So for example, if we have 27 hotels, we're going to put all of those hotels in one group of assets so that we can keep track of them. If we have a whole fleet of cars, we're going to probably group them into a category. And then if we have cash, we're going to group that in another category. So when we categorize assets in that way, or anything on our financial statements, it allows us to do some really great financial statement analysis, which gives us information about how our business is doing. So as far as our assets go, we're going to divide those into two broad categories. We're going to divide them into current assets and long-term assets. So if we're talking about a current asset, we mean things like cash or accounts receivable or inventory. So they are either cash or they're close to being cash. So accounts receivable represents money that your customers owe you. So when they pay you, you will have cash. And then your inventory represents future sales. So when you sell that inventory, you will get cash. So when we class things as a current asset, we're looking at liquidity. Are they already liquid, meaning cash, or are they close to being cash, like our accounts receivable and our inventory? Now, our non-current assets are also known as long-term assets, and that gives you an idea of what their use is. So we are buying a hotel because we're going to use this hotel to create future income. We're buying Boardwalk and Park Place because we're going to use these properties. We're going to either hold them until later and sell them to make money, or we're going to build a hotel on them to make money. So our non-current assets or our long-term assets are assets that we're going to be holding on to for a while. Now, if you need more in-depth information about assets, and who wouldn't want to do that, you can jump over to my blog at accountinghowto.com, and I'll link my asset-related articles in the description. I'll also include in the description my links to my other videos about assets so that you can get to understand more about current assets and long-term assets. Until next time, stay balanced, my friends.